Good afternoon, ladies and gentlemen. This is Alan Heffling from Comstock Investments. I'm the head broker here at the Comstock. Had an exciting day today. Had the USDA supply and demand and production report. Well, there's a few surprises in there today, but we didn't really do any chart damage to the uptrend that we've been in the last week to 10 days. So we'll get right to the numbers here. Give me a second here. Okay, as you can see, whoops, I got to go over here. Next, okay. All right, here's the numbers here. This last year's carryover was a bit of a surprise to the trade. You can see the average trade guess was 2.3 billion bushels. They raised it 2.37. There's a little bit of a surprise there. Soybeans, they were looking for a 15 million bushel decrease, and it came in at 40 million. So that was a little bit positive to the trade. And then ending stocks for this coming crop. So actually, they take the carryover from last year's crop, put it in this year, and actually the carryover doesn't really shrink much at all because of the increase. If you remember, on June 30th, we had 900,000 acre increase of planting acres, and USDA did not lower the corn yield. Everybody, the average trade guess was looking for them to lower it by a bushel to bushel and a half. They kept it at the same, 170.7, I believe it was. And you can see our soybean carryover. Average trade guess was 490. The last report that the USDA came out with was 495, but because of the smaller carryover this year, it goes directly into this coming year. So, we're below 500, that 490 million mark, so it looks pretty good there. The wheat number was disappointing. As you can see, the trade guess was looking for 867 million bushels, came in at 938, and that's basically because of better yielding wheat. So, okay, kind of breaks down the wheat a little bit here for you. Last month, we were 1.8 billion bushels. Today, it came in at 1.76. And that just kind of breaks down each wheat category. The durum wheat, that's what's pushing the Minneapolis wheat right now. As you can see, a year ago, we were at 104 million bushels. USDA is projecting at 57. So it's about a 40-45% decrease in production. And that's what's got the Minneapolis wheat all excited. But however, it looks like the excitement has slowed up some. And I'll go into that a little further detail down the road here. But as you can see, all wheat, the carryover does drop from last year. Or actually, yeah, it does drop from last year, but not as much as what some of the traders thought it would. So we had kind of a negative day there. All right, here's the supply and demand soybean table. We'll go through quickly here. The old crop, as you can see, they took 10 million from crushing, but they added 50 million to exports. And the net was a 40 million bushel drop in ending stocks. Not a big surprise, but a little bit bigger than they thought. They were looking for maybe a 15 million. It came in at 14 million. What's starting to get interesting in my eyes here is the ending stocks for next year, the 2017-2018. Now you have to bring in the 40 million less bushels that we had from last year. So we start out with 40 million less. Production, they raised by 5 million. acres. And I got to point out, they did not change the yield in soybeans. They kept it at 48 bushels. Some people are arguing that it's worse than that. But you got to remember the crop, the soybean crop is made in August. Short height to beans doesn't really correlate with yield. But there is some issues out there with stands, issues with later planting, but that all has to be played out in weather, and that's the key here is the weather. But you come down here, total supply, we're still, just do the math there. They kept the crushings the same, exports the same, everything was the same. So we basically took 35 million out the previous 49, and we're getting 460 million bushels. So it's not about as high as it is this year. And you can see where the price was, so I'm not as bearish as the bean market as I was before the day started. All right, here's the world ending stocks. The world ending stocks, if you look at the corn, we grew from last year. This is 16-17 crop. We grew from last year because basically of the big American production, South American production in the soybeans, and just the big old wheat market worldwide. I mean, we grew our wheat stocks a year ago also. Now the current conditions, we do lower a little bit of projected 2000 or the next year world ending stocks. That's basically coming from the U.S. Because we've dropped 4.5 million acres of planted acres. Soybeans, we drop a little bit on that. That's basically production. We basically are not going to produce as much bean bushels as we did a year ago. And this is a little bit of a surprise yet, is the world wheat ending stock. We're actually growing it yet. So to really keep the wheat market in the uptrend, the world's going to need some type of problems with production someplace in the world. And at the moment, we don't see that. Okay, here's the corn supply demand worksheet. The feed and residual, they took 75 million acres off of that. So that gives us basically more bushels of beans or corn to the carryover. And that's a 75 million added to the carryover. So we're at 2.37. You bring that into the, and the added acres. You got to remember, we planted supposedly 900,000 more acres of corn, and they think we're going to harvest 1.1 million acres more. However, another thing is they left the yield the same. That is questionable by the trade right now, but that's what the numbers that we saw today. So basically, with the 75 million bushel carry in from previous year, the 190 million more from this year's production, that deals us with 265 million more bushels of corn we have to work with, but we are going to use more in feed and residual, but we're still looking for the carryover to increase, or actually decrease a little bit from this year, but decrease or increase it from the previous report. So we're basically still going to be sitting at 2.32 billion bushels from a year from now. Obviously, we got a long ways to go to prove that, but that is the numbers that we have to deal with today. All right, here's the wheat supply and demand table. We're losing a few bushels from feed on the wheat side. Ending stocks grows, however, because of this, 23 million bushels. A little bit of a surprise from the trade there. Less acres. They did cut bushels by 1.5 bushels. So increase the carryover was brought in. Bushels were down. Just kind of work through the math here, and you can see that Carryover is dropping from a year ago by about 200 million bushels, 250 million bushels, but we still got a big crop of carryover that we have to work through. All right, I'm going to go through some charts here. The first chart here is December corn. It is a day chart. As you can see, we put the bottom in here right before the acreage report on the 30th. We took off after that. Basically, it had to do more with weather than anything, obviously, because the acreage report was bearish, the corn, but the weather market gave it its strength. Just want to point out here this gap that was left a week ago, Monday. It's not much of a gap, but you could call it an extension gap if you want, and that does project December corn to 435 area, but we're kind of stalled out here. And today, yeah, we had bearish numbers, but the weather bulls are still playing their strength here. I suspect that we may go down to these moving averages. This 394 area is going to be some support, but better support is probably around this 390 to 388 area. These numbers are going to have to hold in there to give us a chance to take these highs out. I'm not throwing the towel in yet, but it looks kind of suspicious that this week's high may hold. But once again, it's all weather related. This is a November soybean chart. We had an inside day. For you that don't know what I consider inside day, we didn't take out yesterday's high or yesterday's low, and we closed between the two ranges yesterday. We closed down 9 1/4 cents, I think it was, at 10.34. I just want to show you here this extension gap that we left on Monday. The previous gap that was left a week ago Monday at 9.62 3/4. You put the extension worksheet in there. 100% of that extension takes November beans at 10.88, 10.87 area. Can we get there? I'm a little more confident that we might be able to get there. Today was seeing the next year's carryover. I don't know for sure if and when we can get there, but I got to respect the charts. I got to respect the gaps that were left. So just be careful if you're short the soybeans right now. I still like hedgers to keep your puts in place. I think most of us have between 920 and 940 puts in place, short dated puts. I recommend keeping a hold of those. Another thing I want to point out, though, on this chart especially, relative strength index. I don't know if you follow our reports, but I always mention the RSI. Anytime it gets above 70, it's overbought, and you can see we're approaching 80%. It can stay there for a while. It doesn't necessarily mean that we're going to fall out of bed here because the RSI is too high. I've seen it stay up there for weeks on end, but it's just a precursor of possibly a top getting close. But as of right now, I do not see it in the charts. We're pausing right here. I still think we could take out new highs, make this new high. Our next target to sell new crop beans is 10.53.5. Make a cash sell on that. So next slide. It's our Chicago December wheat. It's looking. We're pausing here. I don't know if the top is in. My gut is telling me that the top is in, especially if you look at the numbers that we saw today. But we got to respect the gap here. If the gap is closed, that would pretty much confirm to me that the top is in. But if you use my extension gap, it does project to 620 in December corn or December Chicago wheat. So that I can't rule the possibility out of that. So Let's keep an eye on that. And look at the RSI. We were approaching 80%, and now we're back down to 70%. So this pausing action is actually giving the RSI a reprieve, and maybe that's all the market is waiting to do before it goes higher. But my gut's telling me that they've already got a 45% cut in durum wheat. I think it's in the market here. I think the drought is going to have to intensify in the Pacific Northwest, and in the Montana and the Dakotas to really keep this market alive. And right now, I just don't see it. So I wouldn't be afraid to buy either some December 550 puts, 540 puts, throw them in a closet. If we keep rallying, I would sell some calls against it to offset the cost of those puts. All right, now I want to go into some different charts. I just want to show you the cattle chart today. Cattle had an exceptional, powerful day today. We've been going sideways for the last three weeks. We broke through a resistance today, closed limit up, so we'll have expanded limits tomorrow on both the feeders and live cattle. Where can we go from here? This is December live cattle. If you can understand how I figure out my retracement, this is a retracement model here. You take the low and the high, then you see how far we can retrace it up or down. And this particular is how far can we retrace it back up. A 62% retracement would take us to 1888, basically. It sits above the market. Sometimes 62% retracement stops the market. What is interesting on this particular chart, if you go back before we put the high in June, you can see that this 119 area held it in check basically 3 different times on a closing basis. So this 118.90 to 119 is going to be some resistance in December cattle. I cannot rule out a surge to make new highs here. The fundamentals point to possibly new highs in cattle. The key is here a close above 119. So for hedgers, I would look at if you don't have anything on and you got some profits there, I wouldn't be afraid to bring in some puts, some 118 puts for something, something of that sort nature. I don't think I'd short futures at the moment. Except if you're showing $200-300 a head profit in these animals at this price level, I would be seriously looking at shorting futures. Okay, I think I got a feeder cattle chart coming up here. No, this is a hog chart. This is August hogs. Once again, I have a retracement to the downside. As you can see, we put the high in here about 6-7 days ago. We sold off. We got some support around this $82 area, maybe a little bit higher than that. But where the old highs were, that's somewhat support. We did close it below it on Monday and Tuesday, but we're back above it today. The hogs are interesting here. We got July hogs trading right around $92. They go off the board on Monday, the 17th. So there is about a $9 gap that is between July and the August. Fundamentally, the August hogs, I think possibly can get into that gap area someplace between, maybe they can get to 88 to 90 cents or even make a new high on the continuation chart. But it depends on what cash does, depends on what the lean hog index does. But as long as August hog stays above this $82 level, I don't see October and December hogs falling out of bed too bad. So we're going to key off our hedging of the winter months off of August. So I think this week's low is critical on August hogs. So we'll see what happens down the road. All right, this is a sugar contract. For you that follow our reports, we are long silver or sugar. We're long at 1480. We got long the day that the high was made. I don't really like going long on a buy stop, but that is what we did. We got stops working, I believe, around 1394 area. We just about got stopped out yesterday. We're trying to guess a bottom down here. And when I try to guess bottoms, I don't like to give the market a lot of room. Obviously, we were up today about a nickel, I think it was. I just hope that the sugar can rebound here. As you can see, you take the high, the low here at 1348, and the high that we put in on Monday, a 62% retracement, sits at 1407. We have not closed below that yet, so I'm still somewhat hopeful that this was just a correction to test the previous low, and we end up going higher here. So hang with me, guys that are long sugar. We do have that stop in place. Make sure you have that working. Okay, this is a gold chart. This is August gold. I just want to, whoops, I got to go back here. Just want to point out that the gold market has actually been in a sideways pattern basically since about, well, for sure we've been in a sideways pattern since about April 1st. But this support around $1,200 an ounce has been in the book since about mid-March, March 10th area. We went down and tested that low this past week. So far it's held. Can we hold it is the question. I'm not convinced yet, but I look at the relative strength index, which is down here. You can see when we put that low in back in March, the relative strength index was actually a little bit higher than we are now. But for you that want to go along the gold market, I would think I would want to try to buy August gold around the 112 area to 1190 area is where I would buy August gold. Give it, someplace in there. And then you can see this gap over here in January. The bulls need for that gap to stay open. So if you want to buy August gold, try to get it bought between 1210 and 1190. And then I wouldn't give it much past 1170 to the downside. So it's looking somewhat attractive to buy it, but I'm cautious here. I don't think I'd buy it up at this level. I would wait to see if we can get it bought closer to the $1,200 area. So I believe that's it for today. I just want to thank you all for taking your time to listen to this webinar. If you have any questions, the phone numbers are here. You can talk to myself or Mitt or David Shively, or if you want to talk to David Cruz, he's available. Maybe not at all times, but if you want to talk to him, just ask for him, and if he's available, he'll talk with you. So there again, I just appreciate the things that the people that are subscribing to our reports. It means a lot to us. We hope that you continue to do that for us, and then I like talking to our subscribers. We get some information across the country of how their crops look. Just nice chatting with all you guys out there. So once again, the grains are basically in a weather market. The reports pretty much show you that we're going to have plenty of corn left over another year down the road. We're basically 2 years out with 2 billion bushel carryover. It's going to take a yield below 166 to 165 to really get the market above this, to get $4 cash corn. It's really going to take a weather situation there. But we may get there. I can't rule out taking this December corn to this 432 area at the moment. Like I said, the charts today. It did not get damaged with the price lower today. So give us a call. We can go through the charts. Any questions, give us a call. So anyway, thanks again, and have a safe night. All right, bye.